the show begin. Next generation for the win. We're going all in. All together now, let's begin. Let the show begin.
So this is exciting. We have 20 minutes, not even close to enough time to really explore what Asia Partners is up to, Oliver's background. But recently, Asia Partners has raised Fund 2, $474 million Fund 2, which is an incredible accomplishment in this marketplace. I know that in order to do that successfully, you have to have a pretty coherent and unique story. So take a few minutes and sort of walk us through Asia Partners' strategy.
Yeah, happy to do so, and thanks for having me in the hot seat. Let's see how this goes. So first and foremost, we are what is called like a growth equity investor, meaning we don't do early stage, small checks in early stage companies, and we don't do very late stage either, right? So think about us, investing maybe a $20 million check or a $50 million check into a company that is maybe sort of like 3 to 4 years away from a public listing, right? And we invest in companies that are pretty much all across the board in anything that's tech or tech enabled in Southeast Asia. So some linkage to Southeast Asia. And that's really the cornerstone of our thesis, right? So we believe that Southeast Asia's time has come, that we have hit like a golden age of tech entrepreneurship here in this region. And why do we believe that? There's a whole myriad of reasons for that, but to say it sort of like, to bring it across succinctly, right? So we think that this region has hit just the right spot of affluence, like if you want to think about like GDP per capita, right, spending power. And if you actually roll back the clock and you look at other markets here in Asia, so you look at China, you look at Korea a generation earlier, or Japan a generation before that, when they were at the same sort of like spot in terms of affluence, where Southeast Asia is today, most of the value creation in technology, most of the IPOs in technology actually happened when they were at that same spot that Southeast Asia is.
And is that because of discretionary income and people's ability to start spending on goods and services in a more expensive way?
That's right. So that's a big factor there, right? So when you hit sort of like a certain minimum threshold of GDP per capita, actually your spending power goes up tremendously, right? And that allows you to be able to spend more on goods and services, which allows sort of like a domestic backdrop of demand to emerge for the companies that are offering these goods and services. So whatever it is, and it's usually a whole factor, a whole combination of factors there, the data is very clear, right? So when you are in that zone that Southeast Asia is now for probably the next 10 years or so, most of the tech value creation should happen actually during that period.
Why for the next 10 years? What do you mean by that? Is that sort of a critical window after which there'll just be too much competition?
Exactly. So if you and China is a good benchmark here, because China is about 10 to 15 years ahead of us, right? So you hit that sort of like golden zone. A lot of sort of like the tech companies, the large ones, when public during that zone, they still represent a big chunk of today's market cap of technology, if you think about like the total pie, right? But actually, after all those companies went public and became very large, it was much more difficult for newcomers to then, compete in the marketplace, like the big guys were sucking the oxygen out of the room, right? So you have to hit that right combination of, hey, the markets are ready, demand is there, consumers are ready, but you don't have that much of you don't have to deal so much with the incumbents yet, right? So that's sort of like the magic zone there.
Does that mean that this is your last fund?
Well, gladly, it will last for a while.
Right.
And gladly, we overall think like, if you think about our naming convention, we are not Southeast Asia partner, we are Asia partners, right? So other parts of
so India is in your zone.
So India is a funny one, and actually, if you look at the data, if you look at the macro data, India is about a decade behind Southeast Asia when it comes to affluence and GDP per capita. But India has become sort of like this magical place where a lot of investor attention after China went to, because it's like obviously a very large market, and it has a lot of the advantages that Southeast Asia doesn't have, right? It's like one country, one currency. It's almost like all the good factors that you had in China, you can see in India as well. And in Southeast Asia, it's a bit more complicated. Six countries that matter, et cetera, et cetera. So we actually think that India, and this may be an unpopular view today, is vastly overfunded.
Interesting.
Yeah. So if you
too early, just because people were too early.
Yeah. So again, like you can actually plot on a chart, right? GDP per capita. Versus like how much capital is being deployed into certain asset classes. So the one that is relevant for us is $20 to $100 million check size range. And you can see sort of like the journey, right? Like the more GDP per capita you have in a market, the higher sort of like that share of basically growth equity dollars that flow into that asset class. India is way higher than Southeast Asia, although it's a decade behind from an affluence perspective. So it's interesting. And it kind of normalized a little bit in the last 1 to 2 years, but it's still very much elevated.
And this is a really important story for all of the entrepreneurs in the room who are looking to build businesses here in the region, right? Because you have to have a very healthy value chain of capital, right? And my guess is that you see a fairly healthy seed and angel community here, a reasonably healthy Series A, Series B venture community here, but the gap was in the growth equity space that you are filling, right?
Correct. Yeah.
Do we now then, but that's not the entire story, right? So now we have this healthy sort of capital value chain, but we need the ideas and the talent, and I know that you have an insight on that too.
That's right. So firstly, to the point that you mentioned is very important, right? It's almost like if you are a university admissions office, you want a lot of high schools in your vicinity, because that means you can choose like who are the right people to be admitted to the club, right? So there are over 600 companies in Southeast Asia that received that smaller check, like $1 to $20 million in the past sort of like 3 years. So that early stage venture capital ecosystem is thriving, which is great for us, because that makes us able to have like a great top of the funnel and look at like really, really interesting deals, right? The other thing that you mentioned is talent, right? And gladly we had a first generation of tech companies that went all the way to becoming public companies, or alternatively an exit to a strategic or financial sponsor here in the region. So the likes of C Group, Grab, go to Lazada, and more recently also, Property Guru, who was, sold to a financial sponsor. Right?
You could even throw Traveloka into that. I mean, as a travel,
yes. Although
as a producer of talent,
correct.
Spun out.
So this is very important, because on one hand, it provides people, and especially young people that are going through university, it gives them sort of like case studies and role models, right? Hey, I want to ultimately aspire to be also one of those guys, right? Yep. And secondly, the companies that actually went all the way to scale are great, what we call so like academy companies, right? So they spawn out talent. And the saying goes, right, the C-suite of a previous generation winners, all those guys become investors, but the C-suite plus one, so that layer below the C-suite, they become the founders of the next generation winners.
And you've been seeing that.
Yeah, you can mine the data. It's actually quite a fun exercise, and you can see the result of that analysis that we have done when you go to our website and download our 2023 Asia Partners report. But there are all these kind of like talent flows that are happening, right? So one interesting just factoid out of that is we saw a huge talent flow coming from C going to ByteDance, TikTok, sort of like in 2022, 2023. And there was obviously a precursor to their e-commerce ambitions, overall. So you can actually see it all in the data, right? As long as you track what's going on, you maybe understand a little bit where the puck is going.
Yeah. So Asia Partners website, go there, download the report. It's 167 slides.
Yes.
But it's incredible content, really remarkable. Let's bring it a little bit closer to travel. You have an investment in Red Doors. What did you see there, and how is it going?
Yeah. So first and foremost, the travel ecosystem as part of the overall tech ecosystem is hugely important and often one of the subsectors of the overall tech space that scales first, right? So if you think about again, take India as an example.
And when you say scales first, you mean the demand side?
Demand side and
People
overall
start to
the overall size of the company, right?
Right.
You take India, you look at a company like Make My Trip, it already IPO'd in 2010, right? Flipkart's exit to Walmart was in 2018. So that gives you sort of like a certain sign of the magnitude that travel often peaks first, right? So it's hugely important for investors to be on top of what's happening in travel. And travel usually goes in two phases. You have sort of like the big horizontal platforms at first, so like the Make My Trips, the Travelocas here in these regions of the world. And then over time, once the ecosystem becomes a little more sophisticated, you have more verticalized, specialized solutions. Could be a specific software for the travel industry. It could be a payments solution for the travel industry, right? And it becomes a bit more B2B as well. And then what we have also seen is that, especially if you go to long tail supply, so think about alternate accommodations, think about like 1 to 2 star hotels, that becomes a little bit harder for the OTAs to source directly. Right? And thus you have the emergence of players like Red Doors that are really good being entrenched locally in markets like Indonesia and Philippines to not only aggregate that supply, but then also standardize it, put a certain sort of like brand wrapper around it so that the consumer knows what he or she is buying. Right?
And seemingly well positioned for those rising tides that you talk about, right?
Yeah.
Because as they grow supply, we should see incrementally more demand, RevPAR begins to increase, their economics get better, and the flywheel starts to really spin.
Yeah.
So are you looking elsewhere in travel? Do you have any particular issues or opportunities that you're looking at now?
Yeah, so overall, I think what has been an interesting transition from like what we looked at during Fund 1, which is sort of like in years 2019, 2020-ish, and then now Fund 2, so like last year onwards, is again that trend of verticalization and specialization. And then a big trend more from B2C to B2B type of solutions, which often goes hand in hand with specific software or payment solution for various industries. So travel is no exception there. It's pretty much like where other industries are also at. So it's important to us. They need to fulfill a certain minimum threshold to be interesting for us as sort of like a growth equity investor.
Well, they have to be able to ingest a $20 million check.
Correct. That's always a good good way to check whether the company is ready. But it should also have like a certain minimum variable profit. It has certain emergence of operating leverage. The path to profitability should be quite solid, right, in the near to midterm. So these are sort of like financial indicators that we look at before we would invest in any of those companies.
So how is the AI story playing out in your thesis? I mean, is that factoring into what you're looking at, how you're looking at companies? Do you think it's going to be a major disruptor that enables more entrepreneurship, or is it going to be, power to the giants because they have the data?
Yes.
Who wins here?
Yeah, so firstly, we don't really see AI itself as a huge asset class for a Southeast Asian focused investor, right? So a lot of the companies that we assess that we want to make investments into, they obviously leverage a lot of AI tools. They offer AI services. They have embedded AI into their operations. And that becomes then a huge factor, right? You take a company like Red Doors, they use AI when it comes to pricing, when it comes to supply acquisition, customer service, review management, you name it, right? So you can really create an efficient, scalable organization, and ultimately you can increase sort of like the profitability that you have, as a company. So that's hugely important. We also think that, again, like going back to the thesis of long-tail supply aggregation and sanitization requires a certain on-the-ground, in-the-field type of element. It's probably less disruptable by AI than, for example, demand generation at scale. Right. So if
that would be probably B2C consumer, e-commerce, and travel.
Correct. Yeah. So again, you have to kind of like unpack that a bit. Like there's a certain supply side, and there's a certain where again, like players like Red Doors operate into it, then they kind of like distribute through various channels.
Yeah.
And then there is the huge demand side of travel.
Yeah.
And again, like on the demand side, I see probably higher risks for disruption that I see currently on the long tail supply side from an AI perspective, right?
Yeah, interesting. I think we're probably going to talk about that later today. So I want to, with the time that we have left, I want to take a little bit sort of a journey back into your path, because I think a lot of people, they see investors like us and they assume that we come, out of banking, that we're, we're finance guys, right? Oh God, no. In Oliver's organization, you can't make it to partner unless you've had operating experience. My background, obviously, I started a bunch of companies. You spent a number of years at eBay, all over the globe, cutting your teeth. Why do you think operating experience is so essential to being a good investor? And what do you bring to the table as an operator that you wouldn't if you were just a whiz investment banker? No offense to the investment banker.
No offense. No, I think it's ultimately what entrepreneurs are looking for are true partners. I fundamentally believe that it's not only about the money, but it's also about how can I scale my company in the right way, at the right sort of like gross margin profile, operating leverage, et cetera, right? And how can I ultimately become a public company, right? Like, what do I need to do with my organization? How do I need to stress test that, right? So what we often find is you have early stage companies that are now looking for a growth equity check, and their boardroom is filled with basically mainly early stage investors, so that are there because of their investment, that often have a financial services background, right? And again, like, there's nothing wrong with that. But if you think about diversity,
well, I don't agree with you there, but keep going.
Yeah, no, and it's helpful, right? Because it helps you to think about like how to structure your next round and how to think about how to operate and play the capital markets in a way, right? But so what we can bring to the table is like, we have seen sort of like organizations grow from hundreds of people to thousands of people. We have see organizations grow from maybe a single market to multiple markets, like across different business models.
And you've seen mistakes. You've lived through mistakes. Your
yes,
eBay
yes,
example
okay,
in China.
I know,
You're going to bring it up.
You're going to bring it up. Yes.
This is where the pain comes in.
That's right. Okay, so Chris is, prodding. So let me tell you that story, right? So I originally came to Asia 20 years ago. That unfortunately reveals a little bit indirectly my age. But yeah, I was part of this disastrous eBay China chapter, where we had 80% market share lead, or an 80% market share in China in 2004, and then we got beaten up by this back then unknown company from Hangzhou named Alibaba, and the rest is history, right? So that actually taught me and taught us at Asia Partners, because we still like apply this lesson today, right? A fundamental point, right? Where there's certain business model where local trumps global, right?
So in eBay, you brought a playbook to China, and you're like, we know how to do this. We're going to crush it, guys.
It worked in Germany. It worked in Australia. It worked in UK.
Don't tell us anything. Go wrong,
right?
Let's go.
Yes, exactly. And Jack Ma like perfected this metaphor of like the crocodile in the Yangtze River that can eat the big, the big gorilla, right? Which was eBay. And that's actually part of our belief now, right? Yeah. Look, it doesn't work in search. It doesn't work in certain parts of the OTA business probably, right? But if there is sort of like a deep sort of like entrenchment locally, because you have to deal with local merchants, local customers, local payments, local content, you name it, right? Often the local guys actually beat the global guys.
It's a way of looking for those little moats, right? Yeah. That sort of aggregate to a larger moat. And it's also, I imagine, a bit of humility, right? When you've been in the trenches, you thought you were going to win, and then you got smacked.
Yes.
Right? You have a respect for how hard it is.
Right.
And which makes you a better partner for those entrepreneurs.
Yeah, I mean, you don't operate through a spreadsheet, right?
Yeah.
It's so easy on a spreadsheet to say like, oh, gross margin percentage should just increase, right? Like 1 percentage point each year, right?
Come on, easy.
And look, and then we're going to grow our cost side, just not as fast as the gross profit, right? Like very easy, but like to be able to appreciate how hard it is to build businesses ultimately.
Yeah.
We think that empathy in a way helps us in terms of the conversations, right? And ultimately, it should help us to underwrite better as well, right? Which is like self-serving. Anyway.
And from your own talent development, if you have a superstar that you hired in as an analyst, they came out of investment banking, they're moving up through your organization, they'll hit that threshold where partners next, you'll actually send them out to work in a portfolio company for a year or two to get that operating experience.
Yeah, so at this point, like if you are VP or higher, you have to have that operating experience, right? And all of us 6 co-founders have it, our 2 VPs have it, right? So there's nothing against like going through sort of like the investment banking route, going through the analyst program, going through the ranks there. But at some point you need to like cut your teeth in a way. Right?
Skin your knees out there in the real world. Right.
Exactly, yeah.
Awesome.
We would love to keep that for as long as possible in terms of having sort of like that dual mindset of operator, investor in the organization,
Well, from one investor to another, I'm so impressed with what you've accomplished so far, and the thesis is so tight. I wish you all the success in the world.
Thank you very much.
Appreciate you taking the time. Thank you.
Yeah. Okay.
They're ready now. Let the show begin. Next generation for the win. We're going all in. Take center stage now. Let's begin. Let the show